The focus, and for those of us who've been here at the WEF for the last 24 hours, the comments are all about China and oil and what's going to happen and will that affect the world. And the answer is that those two things alone are not going to cause some kind of global, disruption, recession, unless something that is really a left tail event happens. And I don't think that anyone foresees that, and I don't think that the policymakers in China are going to let that happen. They're working very hard to do that. There's a lot of them here who are explaining a lot of the moves and the things that are happening. They, sort of the ball got fumbled as we came out of the gates at the beginning of the year, but there's so much there, and you talk to the people from the region who are here, and their excitement about what's happening in the world, their excitement about the capital markets developments within their country, and their excitement about population growth there. We can't forget the dynamics that are going to happen that are going to be different than the last 30 years of the one-child policy. All of those lead to different dynamics. There was a rumor out there this morning that oil was going to trade at a negative level, I guess, like interest rates. I mean, it's just, there's a lot of exaggerated points out there, and you have to bring it back to reality, which is you've got a lot of good fundamentals, you've got a lot of cash on the sideline, and you have a lot of people who want to invest. Talk about emerging markets. If you look at the major sovereign wealth funds, central banks, and really wealthy people in the world, they're continuing to invest in India. They're continuing to invest in China. They want to look at Japan. That's very interesting to them. They're taking a much more focused look at Mexico. And things like the United States and Europe, when you have wholesale selling, you've got very, very good indiscriminately sold companies that are now at values that they shouldn't be because they had to be sold for liquidity purposes. So purposeful stock selecting and a lot of long-short investing, a lot of what Anthony does, a lot of what our hedge fund investors do, that's where people are saying now is the time where they're going to be able to make much greater returns for the clients because you get these stretched out valuations and resets.